a new fee for auto-invest users on Mintos, a 200,000 euro fine for Bondora, a rebranding at HeavyFinance, a new CEO at Twino, and a handful of recently published annual reports. As you can see, a lot has happened recently in the peer-to-peer lending industry, and for sure we're gonna tackle all of those specific topics. But before we get there, let's first take a look at how my personal peer-to-peer portfolio performed in the previous month. In April, I earned a total of 1,009 euros from my outstanding peer-to-peer portfolio, marking the first time where I have achieved a 4-figure income in 2 consecutive months. The best overall performance in my portfolio comes from my bond investments on Mintos with 13.6%, followed by Income Marketplace with 13.21% and Nectaro with 13.08%. Looking at the bigger picture, 10 out of 13 platforms in my portfolio are currently delivering a total return above 10%, with Lande also closely scratching the double-digit area. If you are currently looking for high-quality platforms for your portfolio, then please check out the video description where I have linked my top 5 peer-to-peer platforms for this month. In April, I only had a total of 2 new transactions in my peer-to-peer portfolio. On one side, Income Marketplace saw a deposit of 1,500 euros, specifically to expand my exposure with loans from ITF Group. On the other side, 500 euros have been withdrawn from Crowdpeer due to a lack of investment opportunities at the beginning of the month. The value of my outstanding peer-to-peer portfolio increased to 117,380 euros last month, with 120k being now the target for May. Next up, let's discuss the most recent events that have happened in the industry. Peaberry has recently surpassed 2 major milestones in the platform's history. First, more than 100,000 investors have now registered on the platform. Second, over 3 billion euros worth of loans have been funded through the marketplace. These are some impressive figures, especially when considering Peaberry's outstanding portfolio quality with a 0% default rate. In terms of the latest financial report, Peaberry reported a profit of nearly 580,000 euros last year, marking a 32% increase compared to the previous year. At the moment, I am considering to invest another 5,000 euros on Peaberry in order to move up to platinum status. The upgrade in the loyalty program would make it easier to allocate funds via auto-invest, and it would also allow me to push my return back up to 10%. Looking at Income Marketplace, the platform was able to grow its portfolio by 1.7 million euros last month, thanks to continued investor demand and an overall good supply across most lending companies. Income has also published its financial figures for 2024, highlighting the need for investors to remain patient. The platform reported a loss of 613,000 euros, showing a slight increase of 4% despite some moderate revenue growth of 17%. More importantly, equity has once again turned negative, which underlines the importance of the upcoming fundraising round to ensure the platform's continued operations. Considering these circumstances, it only seems logical for Income to temporarily suspend the bridge payments for the outstanding Click Cash claims. To reach break-even, Income continues to aim for a portfolio size between 30 and 35 million euros. Moving on to Escated, the platform confirmed its positive trend from March by adding another 2.5 million euros to its assets under management in April. This brings the platform's total portfolio to now 52 million euros, which marks a new all-time high. If this turns out to be a sustainable trend, then personally I would consider increasing my investment on the platform again. Looking at Mintos, the platform has recorded a loss of 2.1 million euros after 2 consecutive years of profitability. Although revenue increased by 9%, operating expenses grew even more due to investments in new products, IT systems, and rising employee expenses. The KPIs in Mintos' balance sheet remain strong, however, with the equity ratio being at an impressive 54%, the liquidity ratio hit a historic high of 2.16, and the debt ratio is still solid at 0.85. A bigger concern for most investors has been Mintos' recent announcement to introduce a management fee for using the classic Auto Invest feature. Starting May 16, an annual 0.29% fee will apply to the custom loan portfolios, with both the primary and the secondary market being affected. This is certainly an unpopular move among many investors, although from Mintos' side it actually makes somewhat sense. Despite managing 700 million euros in investor funds, Mintos only generated 12 million euros in revenue last year, which ultimately ended up being a 2 million euro loss. By comparison, Bondora generated 52.6 million euros in revenue with a slightly smaller portfolio size of only 600 million euros. To return to profitability, Mintos is now facing two options: either cutting costs or finding new revenue streams. Since Mintos appears reluctant to increase commissions for its loan originators, possibly out of fear of becoming too expensive for its partners, the burden now shifts to classic Auto Invest users. What is your take on this decision, and how will it possibly impact your investment experience on Mintos moving forward? Please let me know your thoughts in the comments below. Lande has recently published its 2024 financial results as well, and the company has achieved a significant milestone. With a profit of 166,000 euros, Lande has reached profitability for the first time in its 3 years of operations. The balance sheet KPIs also look strong, although they reflect the relatively small balance sheet size of only 677,000 euros. The equity ratio stands at an impressive 88%, the liquidity ratio is very healthy at 2.5, and the debt ratio is so low at 0.14, there is actually very little room for further improvement. In conclusion, Lande appears to pursue a very conservative and sustainability-oriented growth strategy, avoiding debt-driven expansion. From an investor's perspective, it's important to note that this is so far only an unaudited internal financial report, while Lande promised to submit an audited version later down the line. And the last annual report where we will have a look today, I promise, is the one of Nectaro. According to the 2024 numbers, which represent the company's first full operational year, Nectaro reported a loss of almost 1 million euro. This was mainly due to marketing expenses that have grown by 280,000 euros and employee expenses that have increased by 300,000 euros. Considering the support of the parent company, Nectaro could have easily allocated expenses differently to end up with a better performance, which is something worth noting on the positive side. Despite the lack of profitability, Nectaro's balance sheet looks quite healthy. The equity ratio stands at a solid 64%, the liquidity ratio is 1.97 and the debt ratio is 0.55. Overall, the financial indicators are good and healthy, although they should not be overestimated given the relatively small balance sheet size of only 422,000 euros. HeavyFinance has recently rebranded the platform's name to InSoil Finance, which is supposed to give a better reflection on the platform's purpose. Aside from the new name, I have decided to temporarily pause my investment until the first green loan results become available. Being an active investor over the past 2 years, with 25% of my exposure being in green loans, it's now time to not only produce green marketing, but also to finally meet the high expectations on the return side. Another more problematic platform remains Twino, which has now presented its 4th CEO in the last 5 years. After the departure of HeavyFinance, who stayed at Twino for 2.5 years, the Latvian Nauris Bloks will temporarily take over for 1 month before a permanent successor will be announced. So the instability at the operational top remains an ongoing issue. Additionally, the head of communications has left Twino as well after being with the company for nearly 10 years. Considering the improvable communication over the past years, the operational stagnation in business development, and difficulties to recover funds from Russia, Vietnam, and the Philippines, hopefully the current situation can be used as an opportunity for a fresh start towards better times. And finally, let's address Bondora 1 second as well, which has recently received a fine of 200,000 euros from the Estonian Financial Supervision Authority. Between December 2023 and February 2024, Bondora is said to have entered into loan agreements with consumers without properly assessing all consumer-relevant criteria in accordance with the law and without ensuring that the obligations arising from these loan agreements could be fulfilled. In response to my inquiry, Bondora communicated they will not appeal this decision. Instead, the company has acknowledged the decision by the Estonian authority and it has already taken steps to align its internal processes with the relevant requirements. As a reminder, a few years ago, Bondora has also faced an issue of similar nature in Finland, also being imposed with a fine of 100,000 euros. At the time, Bondora had unlawfully charged consumers excessive credit costs between September 2019 and November 2021, which exceeded the legally permitted interest rate. As you can see, staying up to date is quite crucial in the peer-to-peer lending space, which is why I highly recommend joining my Telegram or WhatsApp channel if you always want to be informed about the latest events when they happen. Thanks a lot for sticking around until the end, and I hope to see you guys in the next video again. So long. Bye bye.